Fairbanks Board of Directors. I'd like to take a moment, as we do each week, to thank our executive partners whose logos you saw on the screen before we began our presentation today. Not only are these members the backbone of the Fairbanks Chamber's advocacy efforts, they are the kinds of businesses that our community depends on most, both in the best of times and the most challenging times. The Fairbanks Chamber is appreciative of their partnership and support no matter the season. A full list of our executive partners can be found on our website. I'd like to welcome Brenna online to help us recognize our new and renewing members. Brenna?
Thanks, Sabrina. So we'd like to welcome a new member this week, Quality Sales Food Service. And FYI, if you haven't heard, they do have hand sanitizer, so run and grab some while you can. And we'd also like to thank some renewing members this week as well. Candlewood Suites, Wilson & Wilson CPAs, Carol H. Bryce Family Center, Fairbanks Summer Arts Festival, Hawks Farm and Garden Center, KTVF, KXDF, and KFXF, that's a tongue twister, and Midnight Sun Council Boy Scouts of America. We'd also like to thank our 110% Renewing Club members, which have donated above and beyond their membership investment to help support the Chamber and our advocacy actions. And that's Grand Denali Lodge, located in Denali National Park, and Hawks Farm. They also joined the 110% club this week. So last week, my membership minute focused around looking locally to find supplies for your business to help you reopen up, whether that's hand sanitizer or PPE for your employees and clients. Something that I want to focus on today in my membership minute is looking locally for other goods like masks. We recently just heard of a member, Fairbanks Orthodontic Group, that has made masks through local artisans, and they actually purchased a large amount so that they could protect their employees and clients when they come to visit them. They created a system where they would have a basket with clean masks that clients could use and then a dirty basket so that they could reuse and sanitize them. This is a great example of how creativity can help a business reopen during these challenging times. So we encourage you to look locally by contacting quilt shops, Facebook Marketplace, or even Fairbanks Urology. We know they're giving away some masks to businesses to help you reopen and take those appropriate measures to make sure that you and your clients are safe. Back to you, Sabrina.
Great, thank you so much, Brenna. Our board of directors met virtually yesterday and heard from our accountant, Debbie Gross at RJG, as she presented the Fairbanks Chamber's 2019 financial review and reviewed our tax filings for 2019 as well. It is with tremendous pride that I can say that the Chamber is a financially healthy organization that is able to weather the storm created by the economic fallout from this pandemic. Strong leadership over the last decade and cost-conscious decision-making have positioned us well heading into the realities of 2020. We're able to continue to deliver our mission by bringing our members programs such as today's presentation because of our financial strength and because of our dedicated members that continue to renew their faith and membership in us. Leading into the Memorial Day holiday weekend, I'd like to recognize and honor the men and women in our community and those a part of your family who died while serving in our U.S. military. Let's all take a moment to remember those in our circle who made the ultimate sacrifice. Thank you. And now we'll go to Marissa with her President and CEO report.
Thank you so much, Sabrina. I do have a few announcements for folks today from the staff here at the Chamber. Tomorrow we'll be hosting a virtual coffee talk event, and we hope that you'll grab your favorite morning get-to-go beverage and join us with your fellow Chamber members for a business-minded conversation. This week's topic is remote management and communication tips. So come with your questions, your recommendations, and maybe some remote work hacks that you've learned along the way. You can find event details and a participation link on our events calendar, on our website, or in yesterday's edition of The Scoop. For Leadership Fairbanks, I wanted to give you an update that we have reached the end of our Leadership Fairbanks class of 2020. Our leaders met with their final session our leaders met for their final session last week, where they heard from a guest speaker named Stephen Shaleski from the team of Simon Sinek. They had timely talks about redefining goals, as well as overviewed their growth throughout the Leadership Fairbanks year. I would like to take a moment to kind of thank the businesses that sent leaders from their organizations in for Leadership Fairbanks this year amidst the challenges that this class faced, just like every other class of 2020. This year more than ever, we definitely appreciate the support of these super flexible and willing to learn and very eager leaders in our community. So shout out to Associated General Contractors of Alaska, Bettesworth North Architects and Planners, Denali State Bank, Design Alaska, Exclusive Paving and University Ready Mix, Fairbanks North Star Borough, Laborers Union Local 942, Life Med Alaska, Mac Federal Credit Union, Madden Real Estate, Shannon and Wilson, Spruce Tree Montessori, U.S. Army Alaska Garrison, Usabelli Coal Mine, and Westmark Fairbanks Hotel and Conference Center. We're grateful to all of the businesses who see the value in Leadership Fairbanks and made the choice to put their employees through this course. Now we would like to show a graduation video that facilitator Jeff Welch has put together for our graduating class of 2020.
Congratulations to the remarkable Leadership Fairbanks class of 2020, who faced the most unexpected of circumstances with grace and poise. The final 3 sessions of their time together took place separately, but at each juncture they demonstrated adaptability and a desire to move forward by whatever means available. And while I love each of the Leadership Fairbanks classes I've led, I am proud of this group for reasons that are unique to them, because they've endured through the strangest of days. It's interesting that the traits that make someone an effective leader during a crisis, things like strong communication, decisiveness, and the ability to manage tension, are really just the traits that make someone an effective leader anytime. The only real difference is that during a crisis, people don't care about your job title, they care about how you act. During a crisis, people are desperate to hear from those who will help them navigate uncertainty with genuine concern for their well-being. These students are graduating Leadership Fairbanks today, but that doesn't make them leaders. They are leaders because they listen. They are leaders because they build and nurture trusting relationships. They are leaders because they choose to make difficult decisions. They are leaders because they work each day to make things better. They are leaders because they take responsibility for the people around them, even if it isn't part of their job description. They are leaders because they care. Now, right this minute, is a great time to act like a leader. And if you want to grow as a leader with a cohort of other people who want to grow as leaders, applications are now being accepted for the class of 2021. We need your leadership now, more than ever.
Wow, that was amazing. Thank you so much to Jeff Welch and to all of the participants of Leadership Fairbanks. And I would be remiss as a leader of the Fairbanks Chamber if I didn't take this opportunity to send a special shout out to Brenna Shockey, the Fairbanks Chamber's very own graduate of the class of 2020. We're very proud of her and her accomplishments and are so grateful to have her as part of our team here at the Chamber. Again, thank you to all of our leaders, our participating businesses, and to Jeff. As you saw throughout this video, that registration is now open for the class of 2021. So you can fill out that application or just simply let us know if you're interested in maybe participating in that program. You can find more information about that on our Leadership Fairbanks page found on our website in the events and programs section. And then one final comment for those of you that have noticed that those of us here at the Chamber are physically in our offices. We did come back to the office this week, and we are practicing our social distancing by staying in our offices, and we're wearing our masks whenever we are around one another in the workspace, and just making sure that we are following the best recommendations from our healthcare professionals in our community. With that said, we're not planning on opening our office back up to the public until maybe June 1st. In the meantime, we are here to continue to serve our members, so please continue to reach out to us as you have been over the last 2 months. You can call us or email us at any time, and we are happy and hopeful to serve you in the very near future. Thank you so much, and back to you, Sabrina.
Great, good to see you back on the home front, Marissa. Now for our main presentation. If you are watching this presentation live, remember that you can type questions into the chat section and we'll share them with Mike following his remarks. We know that many of our member and community businesses were able to take advantage of the PPP loans, but have lots of questions about the mechanics of forgiveness. We are grateful to have Mike Richards here to shed some light on the subject and provide some up-to-date answers of where we stand now with PPP loan forgiveness. Mike Richards, CPA, was born and raised in Fairbanks, Alaska. He received a bachelor's degree in accounting from Point Loma Nazarene University in San Diego in 2000. Mike worked for the CPA firms Lipsey Millimaki in San Diego and Hagen Kurth Perman in Seattle before moving home to Fairbanks in 2007 to join RJG, a professional corporation. Michael became a licensed CPA in the state of Alaska in 2008 and became a partner at RJG in 2011. Mike has served on several nonprofit boards in the state of Alaska, including the United Way of the Tanana Valley, the Fairbanks Estate Planning Council, and the Alaska Society of CPAs. Michael's professional accounting experience has included performing attest services in tax return preparation for a variety of for-profit and nonprofit entities. I'm happy to welcome my good friend Mike, and thanks for joining us today. Good to see you.
Good to see you too, and thank you for having me, and thank you to the Chamber for hosting this event. This PPP loan is, although it's a good thing, there's a lot of confusion around it, and I think this is an important presentation for a lot of people because the forgiveness portion of this loan is so important to so many people, and there's been so many unanswered questions. And the timing of this presentation is pretty good because on last Friday, the SBA came out with a loan forgiveness application. So this is all relatively new, and some of the viewers, maybe they've heard about this already. Some of them maybe have not, but quite a few of the questions that were unanswered have now been answered. And of course, now there's some more unanswered questions, but we'll go with what we have, and I'll do my best to go through how we understand the loan as of right now. Next slide, please. So this is the agenda. It's kind of broken up into 3 or 4 parts. I'll start off with the general overview and some recent developments, and then talk about some of the key definitions. And then I'll finish up by explaining how those key definitions fit in with the actual calculation. So some of the stuff I'm going to go over more than once. The last part, when we look at the actual forgiveness application, that's when some of these concepts get put into place. Next slide. So this is a general overview of the loan itself. The information on the slide is actually incorrect. This was as of last Monday, the SBA put this out. I looked today, and there's some updated information. It's kind of interesting because the number of PPP loans have decreased since last week, and the amount of money that's gone out the door has decreased. So I think what's happened is a lot of businesses probably repaid their loans based on this safe harbor date where they can return the loans by May 14th. So at least as of today, there's even more money available. I think it's around 130 billion or 140 billion that's still left to be that you can apply for. I'd like to point out that I think Fairbanks is incredibly fortunate to have such strong local banks and really active local bankers. When this thing first came out on April 3rd, there was a huge rush to get this money. No one knew how long it was going to last. A lot of people were saying it would only last 24 hours or less. And I was absolutely amazed at how hard the bankers worked in town to get everyone the loans, and how prepared they were in a short period of time to even be in that position. So it really made me realize the importance of having a strong relationship with your banker. And I really do think in Fairbanks especially, we're lucky because we have really good, strong local banks. I know people in big cities didn't have as much luck as we did. And of course, no one knew if they were going to put more money into this fund. So my hat really goes off to our local bankers. They did an excellent job. Next slide. So this is just a general overview of the loan. As we go through this process, I'm not going to get into a lot of the actual math calculations. The calculations there's so many of them. They're so detailed. I don't see how we can go through the actual calculation in a format like this and have it make any sense. And I'll warn you, even if I was sitting with someone one-on-one, it'd be hard to go through this calculation. And if we did, it'd take more than an hour. So I'm going to try and limit some of the actual math part of it and stick to the general concepts as much as I can. So the loan amount is equal to 2.5 times your average monthly payroll. Average monthly payroll, the SBA defined that when you applied for the loan, and it didn't really matter if you needed some of the loan or more than the loan that was available. It's a mathematical calculation. You submit it, and that's what you get, 2.5 times your average monthly payroll. And then the beauty of this loan is that if you spend the money on certain expenses and you meet certain criteria, that the loan can be forgiven. And those basic criteria are the proceeds have to be spent during an 8-week period. They call this the covered period. And the covered period starts on the date that the loan hits your bank account, and it ends 56 days later. To qualify for the forgiveness of the loan proceeds, you have to spend it on eligible payroll costs or eligible non-payroll costs. And I'll go over those in more detail in a little bit. At least 75% of the loan has to be spent on eligible payroll costs in order for the entire loan to be forgiven. If less than 75% of the loan is used for payroll costs, then less than 100% of the loan will be forgiven. That's an important concept, and we'll get into that a little later as well. Another key definition they use here is average full-time equivalent employees. I'll refer to them as FTEs throughout this quite a bit. If the average FTEs paid during the covered period decreases relative to the average number of FTEs paid in an optional reference period selected by the borrower, a reduction in loan forgiveness will occur as well. And I'll explain what that reference period is a little bit later as well. There's a couple different options that people have to choose, but you're essentially comparing your full-time equivalent employees during the covered period versus your full-time equivalent employees in another period. And if that decreases, then your loan amounts can decrease. And then if an individual employee's rate of pay during the covered period decreases by more than 25% relative to their first quarter of 2020 pay, then a reduction in the loan can occur as well. Now, this does not apply to all employees, but it applies to many employees, and I'll go through that as well. And lastly, one question I've been receiving a lot this past week is if you received an advanced EIDL loan grant, that amount that you received from the EIDL grant will be reduced from your PPP loan forgiveness. So if you received $1,000 in an EIDL loan and you received a $10,000 PPP loan, you're only going to have $9,000 of forgiveness on your PPP loan. And we'll walk through that a little bit later as well. Next slide, please. So recent developments. Some people have been following this really close, some people have not. But on April 30th, 2020, the IRS issued a notice, and that notice said that the amount of the PPP loan that's forgiven is not taxable. We know that. But the expenses that you use to have that forgiven are not deductible either. So this was not in the original text of the bill. And so at first people thought, well, I'm not going to have to take the loan forgiveness in as income, but I'm going to be able to deduct the expenses. So it was kind of, double dipping a little bit. IRS came out and said, no, that's not how we're going to treat it. My understanding is, as Congress says, well, that's not what we intended. So that's something that might change. But as of right now, you're not going to be able to deduct the expenses. What this means is it's a tax neutral transaction. You don't have income, you don't have expenses. It's for tax purposes, it's zero sum. Also on May 13th, the SBA came out with FAQ number 47, and that states that any borrower with a loan balance of less than $2 million will be deemed to have made the required certification concerning the necessity of the loan in good faith. So a couple weeks ago, the SBA came out and they were indicating that everyone that received the PPP loan should really reassess if they should have received the PPP loan. And this is really meant for larger businesses, but a lot of people are afraid that they might have to pay the loan back because, a lot of people said, I requested the loan, but I could have made it without it. But all you had to do was certify that you had current economic uncertainty at the time of the loan. So I received a lot of phone calls. I think a lot of people received a lot of phone calls wondering if they should pay the loan back. So this FAQ came out and said, look, if your loan's under $2 million, you have that uncertainty by default. So you don't have to worry about paying the loan back. If your loan is over $2 million, then there's some documentation you're gonna have to do if you want to keep this loan. I'm not going to go into that documentation because I don't think there's going to be very many people that have more than $2 million. But you basically need to go back in time and say, this is what our thought process was at the time. You need to assess your liquidity and your other options for financing. So also on May 13th, the SBA allowed seasonal employers to request additional funding on their PPP loan based on an alternative calculation for average monthly payroll. So seasonal employers have the option to calculate average monthly payroll based on a 12-week period between May 1st and September 15th, 2019. This additional funding can only occur if the lender has not provided a previously submitted SBA Form 1502. So what this means is the SBA recognized that seasonal employers are going to have a hard time having any of this loan forgiven, especially in a place like Alaska, where businesses aren't really opening up until May or June, but they're receiving their 8-week clock is starting in April. So they allowed for a larger amount of the loan to be, you can get an additional disbursement. You cannot change your 8-week covered period, that stays the same, but you can receive an additional disbursement if the bank has not submitted Form 1502. It might be too late. I think a lot of banks have probably submitted that, but if you're a seasonal employer and you want to receive more money, there might be an option. I would contact your banker immediately and see if that has been submitted or not. And if it hasn't, you may be entitled to some more funds. And as we'll see later, they've helped out seasonal employers in the forgiveness calculation with this application as well. Lastly, on May 15th, Friday evening, the SBA released this PPP loan forgiveness application. And we're going to go through that application towards the end of the presentation and see how we do here. Next slide, please. Okay, this is the start of the key definitions. You'll hear me talk a lot about this 8-week covered period. The 8-week covered period is the time frame you have to spend the money to be eligible for forgiveness. And the expenses fall into two categories. There's payroll costs and non-payroll costs. And two options exist for the payroll costs. You have a covered period, and this is that starts the first day that the loan hits your bank account, and it ends 56 days later. When they came out with this form, they have this new alternative covered pay period, and that says if your payroll is biweekly or weekly, and let's just say you received a loan in your bank account on April 20th, but your next scheduled pay date is April 24th, your covered period can start on April 24th for payroll purposes, not for the other non-payroll, but for payroll purposes. So you have an extra, they're trying to align your payroll cycle with your covered period. So that was a nice development for some people that have weekly or biweekly payrolls. They can have a little bit more time to spend all their money for payroll costs by starting their pay period at a later time. Next slide, please. So the other thing that came out with this form is expenses paid or incurred for eligible non-payroll costs. So we were a little bit concerned that only the expenses that you actually paid during that 8-week period were going to count. Well, they've clarified that a little bit, and they've said, well, it's expenses you've paid, but it's also expenses that were incurred during that period. So there's going to be, as we'll see later, expenses that you may pay after that 8-week period that are still going to count towards the 8-week period. So that's helpful as well. That's a good revelation. Eligible non-payroll costs cannot exceed 25% of the total forgiveness amount. We're going to talk about that a little bit as well. Next slide, please. What are eligible payroll costs? Gross compensation, which is defined as salaries, wages, tips, commissions, and paid leave that is not covered under the Family First Coronavirus Response Act, of $15,385 or less per employee during the 8-week covered period. That $15,000 is the equivalent of $100K salary a year. It's if you take 100,000 divided by 52 times 8, divided by 52 times 8 weeks, that's where you get the $15,385. So that's a maximum you can pay an employee during the covered period in gross compensation. You can also pay for health insurance, employer share of health insurance, employer share of retirement contributions, or the employer share of Alaska ESC tax. All of those costs count towards eligible payroll costs. Next slide, please. Eligible non-payroll costs. Mortgage interest is one of these eligible costs. When the loan application came out on Friday, it clarified something that we weren't sure about. It appears that mortgage interest includes any business interest for real estate or equipment. So pretty much any business loan you have that you have an interest expense on, you can count. You cannot prepay the mortgage interest, and the principal portion doesn't count. And the mortgage has to be in existence before February 15, 2020 to count. However, it does appear to include if you hadn't paid your mortgage for a couple months and then you pay it during the covered period, the interest that you pay should also be covered too. Next slide, please. Utility payments. The law and the form outlines these specific utility payments. Electricity, gas, water, transportation, telephone, or internet access for which service began before February 15, 2020. I don't exactly know what transportation is. I'm not sure, and I don't see waste on here. That's usually a utility. So there might be a little bit more clarification as what qualifies as a utility payment. But for now, these are the ones that they listed, so we know those count. And the same thing is true for utility payments as was for the mortgage payments or mortgage interest. If you were late paying some utility payments, but you pay them during the covered period, those should count towards forgiveness as well. Next slide, please. What qualifies as a rent obligation? This includes lease payments for real estate and equipment, it looks like. Pretty much any lease agreement that you have for your business that was enforced before February 15, 2020. And again, this same thing for rent. If you didn't pay rent for a couple months and you paid it in the covered period, that should count as well. Next slide, please. Non-payroll cost forgiveness limitations. So I talked about this a little bit before. 25% limitation on eligible non-payroll costs forgiven. Eligible non-payroll costs cannot exceed 25% of the total loan forgiveness amount. In effect, the non-payroll costs cannot exceed 1/3 of eligible payroll costs to achieve the 25% of total forgiveness amount. If eligible payroll costs drop below 75% of the total loan received, the amount of eligible non-payroll costs that can be forgiven decreases as well. So this is important because if you have a $100,000 loan, you might think you can get up to $25,000 on non-payroll costs forgiven. Well, that's not the case if you spend less than $75,000 on payroll costs. If your payroll costs are reduced, then your non-payroll costs are reduced as well when it comes to forgiveness. And we'll talk about this a little bit later as well. Next slide, please. Average full-time equivalent employees. You're going to hear me talk about FTEs a lot throughout this presentation, and there's a couple different calculations. There's a covered period and an alternative selected period, and so FTEs play into this quite a bit. For now, the FTEs is calculates the average full-time equivalents to the covered period or the alternative payroll covered period for each employee. The average number of hours paid per week, divide by 40, and round the total to the nearest tenth. The maximum for each employee is capped at 1. a simplified method that assigns 1 hour or 1.0 for employees who work for 40 hours or more per week, and 0.5 for employees who work fewer than 40 hours may be used at the election of the borrower. This will make more sense when we get to the actual application, what I'm talking about. Next slide, please. So this calculation will be used to determine whether the borrower's loan forgiveness amount must be reduced due to a statutory requirement concerning reductions in full-time equivalent employees. Borrowers are eligible for loan forgiveness for certain expenditures during the covered period or the alternative covered period. However, the actual loan forgiveness amount that the borrower will receive may be less depending on whether the borrower's average weekly number of FTE employees during the covered period or the alternative covered period was less than during the borrower's chosen reference period. The borrower is exempt from such reduction if the FTE reduction safe harbor applies. And we're going to talk about that a little bit later as well. Next slide, please. Oh, wait. Yes, next slide, please. The borrower has an option to select a reference period to compare their average FTEs before the pandemic versus their 8-week covered period to determine if there's a decrease in FTEs that will reduce their loan forgiveness. So when I talk about a reference period here, there's a couple different options, and seasonal employees have some options and non-seasonal employees have other options. Non-seasonal employers, who I think most people fall into that category, have to pick a time of February 15th through June 30th, 2019, or January 1st through February 29th, 2020. Seasonal employers have to pick either of those options above or any 12-week period, consecutive 12-week period, between May 1st and September 15th. So what we're doing is we're taking your average full-time equivalent employees during the covered period, and we're comparing that to a different period in time, either a period of time in 2019 or the beginning of 2020. And the idea is if your full-time equivalent employees does not decrease during the 8-week period versus this reference period, then your loan will not, then you won't have a decrease in your loan forgiveness. But if you don't get your employees back to work, you get your full-time equivalents back up, then you will have a decrease in the amount of loan that you can have forgiven. Next slide, please. So what is the reason for this calculation? I pretty much just went over that. Congress and the SBA recognized that many small businesses had to lay off or furlough or cut back employees to survive. So to incentivize the employers to keep their employees on and hire employees back, they tied forgiveness of the loan to full-time equivalents before the pandemic to cover an 8-week period. Next slide, please. So this is some good news too, and this came out with the application on Friday as well. If you can't get your full-time equivalent employees back up and during the 8-week period, there's a safe harbor that says if you get your full-time equivalents back up by June 30th, you might not have to reduce your loan for the decrease. There's a couple of situations that have to apply for that to be the case, and rather go through that now, I'll go through it later. But you also see the FTE reduction exceptions. This was kind of nice. If an employer has an employee that they make a written good faith offer to rehire, and the employee declines, that's not going to count against their full-time equivalent employee calculation. Also, any employee that the employer has to lay off for cause, they won't count either. Or if someone voluntarily resigns or voluntarily requested and received a reduction of their hours. In all of those cases, providing the position wasn't refilled, those don't count against the full-time equivalent for the average covered period. Next slide, please. So also, one of the things that Congress wanted is they didn't want employers to hire back employees or keep employees on but reduce their pay too much when they're receiving this, it could be free money from the government. So they want the employers to get their employees back up to the rate of pay that they had in the first quarter of 2020. So for some employees, and these are employees that are making less than $100,000 a year, you have to compare their pay rate from January 1st, 2020 to March 31st, 2020 against what you paid them during the covered period. And if you have a reduction in that pay rate of more than 25%, then you could have a reduction in the amount of loan that you have forgiven. Next slide, please. Okay, so now we're getting into the loan forgiveness application itself. As I mentioned before, this came out on May 15th, and the application has to be filled out by the borrower and submitted to the lender to request amount of loan forgiveness. The application that is on the SBA website has 4 parts. The first part is the PPP loan forgiveness calculation form. There's PPP Schedule A, PPP Schedule A worksheet, and an optional PPP borrower demographic information form. All borrowers must submit 1 and 2. 3, they're probably going to need to do for the records to complete the form, and 4 is optional. And by the time you get done with this form, you're not going to want to do any more forms. So I don't think anyone's going to fill out number 4. I wouldn't. Next slide, please. Okay, so I've talked about some of the things that were new in this form. I'll just go over them again really quickly here. The SBA now has an alternative payroll covered period. I think this is beneficial to a lot of borrowers. The SBA also allows eligible expenses that are paid or incurred. Like I mentioned before, we were really uncertain about that, and the SBA has given us quite a bit of flexibility to deduct or to expend more costs than we originally thought. So it's anything that you actually pay, like the cash basis on the one hand, but it's also like the accrual basis on the other. So think about a utility bill that you pay in July that was for June. If June was in the covered period, even though you paid it in July, you're going to get to count that utility expense. Also, they've given seasonal employers the ability to choose the reference period of January 1st to February 29th. This is really big for Alaskans because a lot of Alaskans that are seasonal start up in May and go through September, but they don't have many employees in January 1st to February 29th. So they're not going to have, most likely, a large reduction in full-time equivalent employees. Even if they don't have if they hired a lot less employees now during the covered period, the period they're comparing it against is January 1st to February 29th, when most seasonal businesses don't have a lot of employees. So this is a really big revelation for seasonal businesses in Alaska that didn't exist before this form. So this next point here is, I think it's wrong. It's changed from Sunday when I was looking at this. It appeared, although not certain, that owner employees, self-employed individuals, and general partners' health insurance, healthcare, and retirement costs are not forgivable. So I do think that's most likely the case for self-employed individuals and general partners, but I don't think that's the case for owner employees. I think that was where the SBA was headed with it, but it's not really explicit. And so if I was doing this form right now, unless further guidance comes out, it's an S or C Corp owner that's also an employee, and the business has been paying for their health care and their retirement contributions, I would count them right now. Self-employed individuals, independent contractors, they're in a different boat. It doesn't look like those are going to be forgiven, but that's not new to this form. That was the case prior to this form. What is new, and maybe the only real downside is to this new application, is it looks, as of right now, if they don't change it, that owner employees, again, that's the S Corp or the C Corp owner that also has a W-2, and self-employed individuals and general partners are going to be limited in their forgiveness to the lesser of 2 numbers. One is the $15,384 maximum, or the 8-week equivalent of their applicable compensation in 2019. In other words, this means that self-employed and owner employees can't give themselves a raise. If they were paying themselves less than $100,000 in 2019, and they increased their rate of pay under the PPP loan to have more forgiven, it doesn't look like that's going to be forgiven unless they change it. And I wouldn't be surprised if they do change it, but as of right now, that's what the SBA is saying. And I think that's going to affect a lot of people. Last thing is the SBA changed what we thought the definition of full-time equivalent employees is going to be. We thought it was going to be like Obamacare and 30 hours a week. They changed it to 40 hours a week. I'm not sure how much of a difference that's going to make because you're using the same formula for both the numerator and the denominator for the covered period as well as the reference period. So, you know, if in one period you had a lot more people that were working 30 hours a week, and in the other alternative period you have people working close to 40 hours a week, it might affect you, but I think for most people it's going to have a minimal effect or maybe no effect at all. Next slide, please. Okay, so the application itself is difficult. There's a lot of math, like I said. I think you can get through it, but it's going to take some time. I think people that have few employees won't find it that difficult. People that have a lot of employees, especially if they've had a decrease in full-time equivalents or a decrease in pay rate, there's going to be a lot of calculations you're going to have to do. But the application itself starts out pretty simple with just, you know, basic name, address, EIN number, loan number, and lender number, some information you have to get from your lender because you might not have that information. But the first part is not that difficult. The difficulty starts on line 1, where they have you enter payroll costs. For most borrowers, I think it'll make most sense. It might be the only real way that you can get this done is by first completing the worksheet for Schedule A, and then complete Schedule A, and then complete the loan forgiveness application last. A lot of numbers on Schedule A, you have to go through the worksheet to get those numbers. And a lot of numbers on the loan forgiveness application come straight from Schedule A. So I think this order that I have listed here is the best order to prepare these forms and go through the calculation. Next slide, please. And I apologize, I've got a picture here of the Schedule A worksheet, but it's probably difficult to see. I do have a link to the worksheet itself later on if you guys want to take a look at that. Next slide, please. Okay, so on Schedule A, it starts off at the top. There's 2 different tables. There's table 1 and table 2. And table 1 is for employees with annual compensation for all pay periods in 2019 of less than $100,000. If these employees' salaries are reduced by more than 25% in the covered period, there could be a reduction in the amount eligible for forgiveness. The reason I have for all pay periods highlighted there, underlined, is that if I read that literally, it means any employee, any time during 2019, any pay period. So if you're weekly, if you receive more than $1,923 in a pay period at any time, then you don't go and schedule table 1, you go in table 2. If you're bi-weekly, it's $3,846. Semi-monthly, it's $4,167, and monthly, it's $8,333. So you just have to do a little math, and if an employee worked a lot of overtime one pay period, or maybe they got a bonus, if you can move them from table 1 into table 2, it's beneficial because you don't have to worry about the 25% decrease in pay. If you haven't decreased any employee's pay, then it doesn't really matter which one it goes into. It's pretty simple. So table 2 is reserved for employees with annual compensation in excess of $100,000 during 2019. Like I mentioned before, these employees you do not have to calculate that 25% reduction, and that calculation can get pretty messy as you go through it. So again, as many employees you can push into table 2 that have reductions, the better off you are. Next slide, please. Okay, average full-time equivalents. So the borrower has 2 options to calculate the average full-time equivalents for the covered period. Okay, option 1 says for each qualifying employee, determine the average number of hours worked per week. So that's the total hours worked during the covered period divided by 8, and then divide by 40, and round to the nearest 10th. The maximum amount of each employee is 1. If you have a fractional amount, you have to, again, round it to the nearest 10th and add that 2. So now this calculation here is only for the covered period. So you've got option 1, you've got option 2, which they call a simplified method. And that says use 1.1 for every employee who worked 40 hours per week and 0.5 for every employee who worked less than 40 hours per week. Either calculation will give you the average FTEs you need, but I would pick whichever one gives you the highest number. What's interesting, and I just realized this morning when I was looking at this again, is this option only exists for the covered period. So your reference period, it looks like you don't have a simplified method. That you have to calculate with fractions. But the covered period, you can use these fractions. So there might be an opportunity for some employers to hire a couple extra employees for a few hours a week and get them to count towards 0.5 and get their FTEs up. I'm not sure, but that's what it looks like right now. So next slide, please. So why the FTEs for the covered period matters, I think I've kind of already gone over this a little bit. You don't want a reduction in your FTE because that will reduce your loan forgiveness. There is a safe harbor for FTEs, and it's available if average FTEs from February 15th through April 26th is less than the FTEs for the period that includes February 15, 2020, and the total FTEs on June 30th, 2020 are greater than or equal to the FTEs on February 15th, 2020. So once you start getting into these safe harbors, you have to do multiple calculations for multiple employees. And this is where the time comes in and it gets a little confusing, but there is an opportunity if your full-time equivalent employees has decreased to get that back up by June 30th and have the reduction in your loan forgiveness wiped away. And then I just noted here again that remember that a borrower can show they made a good faith written offer to rehire an employee, or they had to fire an employee for cause, or an employee voluntarily resigns. These and the position was not filled by somebody else. Those will not count against your FTEs. And I think a lot of employers have that issue where they can't get their employees to come back to work, or people just decided, hey, I don't want to go back to work, and they quit or go somewhere else. So they won't be punished for that, which is a good thing. Next slide, please. Okay, how to complete the loan forgiveness application Schedule A worksheet. So this is line by line. I'll go through it kind of quick because I think we're getting a little bit short on time here, and I want to have some time for questions. But the salary hourly wage reduction only applies to Table 1 employees with annualized rate of pay of less than 100,000. Step 1 is determine the average rate of pay for each employee during the covered period. Step 2, determine the average rate of pay for each employee during the period through January 1st through February 31st, 2020, or excuse me, March 31st, 2020. And step 3 is divide step 1 by step 2. If the answer is greater than 75%, no reduction is required for this employee. If the answer is less than 75%, a reduction is required unless the safe harbor is met. It's important to note that for step 1, there's a different calculation for salary versus hourly employees. I won't go through that calculation right now, but if anyone has any questions about that, I can help them with that later. Next slide, please. In short, the SBA will not reduce loan forgiveness for a decrease in an employee's rate of pay during the covered period relative to the first quarter of 2020 if the rate of pay is restored to what it was on February 15, 2020 by June 30th, 2020. So that's a safe harbor for the pay rate reduction. Next slide, please. We're going to move to Schedule A itself. Next slide, please. Lines 1 through 5 of Schedule A come directly off the Schedule A worksheet, which is why it's important to fill out that first. Line 6 is employer contributions for health insurance. And line 7 is employer contributions for retirement benefits. Line 8 is employer share of Alaska unemployment tax. Line 9, and we haven't talked about this, is for owners or employees or self-employed. Those employees or self-employed individuals don't go on Table 1 or Table 2 on the worksheet. They only go on Loan 9. So enter any amounts paid to owners. This amount is capped at $15,385, which is the equivalent of $100,000 per year for each individual, or the 8-week equivalent of the applicable compensation in 2019, whichever is lower. Again, this is the no raise clause for owners. Next page, please. I think you have to move one more page down. I'm on slide 30, perfect. Okay, line 10 is payroll costs. So you're just adding up lines 1, 4, 6, 7, 8, and 9. And then on this form is something kind of interesting. Between lines 10 and 11, there's an option to check a box and skip steps 11 and 12. The text reads, if you have not reduced the number of employees or the average paid hours of your employees between January 1st, 2020 and the end of the covered period, check here, skip lines 11 and 12 and enter 1 on line 13. So this is saying that you will have 0 reduction. If you enter 1 there, you have 0 reduction on your loan forgiveness or a decrease in full-time equivalents. So this looks like it might be another safe harbor. I have a question mark because I'm not really sure. It's the first I've seen this, but it appears that if your FTEs at the end of your covered period are the same as the FTEs on January 1st, 2020, you will not have to reduce your loan forgiveness. I'm not positive about that. We're going to need a little bit more guidance on that, but that's what it looks like. And that could save you a lot of time if that's the case. Next slide, please. On line 11, you enter the average FTEs for the chosen reference period. This is providing you didn't check that box there before. You enter the average FTEs for the reference period. That's either February 15th through June 30th, 2019, or January 1st through February 29th, 2020. Seasonal employees have a different option. I don't know why they'd use that, but there is another option for seasonal employees as well, employers. Line 12 is total average FTEs. Add lines 2 and 5. And line 13, this is the FTE reduction quotient. So you're dividing line 12 by line 11. If the number is less than 1, your forgiveness will be reduced. So this is where all the FTE information kind of comes together. Again, you have your covered period and you have your reference period. And you divide your reference period by your covered period to come up with a number of 1 or less. And if that number is less than 1, then you will have some of your loan be forgiven. If it's a 0.8, then you'll only get 80% of your loan forgiven. Next slide, please. So this is a loan forgiveness application itself. Next slide, please. Line 1, payroll costs. That's the inner amount from line 10 on Schedule A. Line 2 is the mortgage interest. Line 3 is the rental lease payments. Line 4 is the utility payments. And line 5 is total salary hourly wage reduction. That's the amount from Schedule A, line 3. Line 6, you add lines 1 through 4 and subtract line 5. This is just netting the costs eligible for forgiveness with any salary hourly wage reduction. And then line 7, you put the FTE reduction quotient from Schedule A, that's line 13. Next slide, please. Line 8. Lines 8 through 10 will determine the forgiveness amount. If this is lesser, it is a lesser of the 3 lines that will be forgiven. So for line 8, you multiply line 6 by line 7. This gives us the total cost less salary reduction multiplied by the reduction in full-time equivalents. Line 9, you enter your PPP loan amount, the full amount. In line 10, you enter your payroll costs, 75% requirement. So you divide line 1 by 0.75. And so that's 75% of your payroll costs. Line 11 is the forgiveness amount. It's a lesser of lines 8, 9, or 10. So that is what will determine how much of your loan will be forgiven. I know that this is it's hard to follow when you don't have the form in front of you. I understand that. But if you go through the form and you go back and read some of these slides, it might help. So, but ultimately, this is a tough calculation, a tough form, and it's going to take some time. Next slide, please. So I'm looking at the time here, and we don't have a lot of time. So the next several slides are going to go through the documentation that the SBA wants. And I think everyone can read through these slides if they're curious. There is quite a bit of documentation that they want, and they want the borrower to retain that documentation for 6 years. So that's quite a long time, and it's probably worth perusing through these and maybe getting some information ready for the banks when the time comes. If you can go down to slide 40. So these are some helpful resources. There's a Department of Treasury website. There is a lot of new information that comes out in this. I check it several times a day. There's an FAQ sheet, and this is a great place to find clarity on some of the questions. The SBA tends to update this 2 or 3 times a week. There's also interim final rules that they post here. These are kind of a narrative to what's changed in the law and why it's changed. And these have a large impact oftentimes, so it's kind of nice to see if any new interim final rules are posted. And then the copy of the application itself is there. I've attached an article from a guy named Tony Nitti. He's a CPA in Colorado. He writes some really good columns for Forbes and the Wall Street Journal. I like him because he takes some, what I think is difficult tasks or difficult concepts and makes them relatively easy to read. The article I've got posted there is excellent. It's a really long read, but he goes into much more detail with actual examples that can certainly help you. So I'd recommend checking that article out if you want some more information. Next slide, please. Okay, conclusion. So this is the first real bit of guidance that the SBA has released. Hopefully there'll be future guidance. I'm sure there will be. Everything we just went over could change. It wouldn't surprise me. We've heard, I don't know if it's true, but we'll see, that the SBA might issue an interim final rule on forgiveness soon, maybe the next week, maybe 2. And that rule might add even more flexibility. So we'll see. The SBA's got some ability to change the rules, but some things are statutory, they can't change. So there's some things that they've created here, like the 75% rule. That's something that they might be able to change just administratively. So we'll see if they come out with more guidance. Definitely before you fill out this form to actually submit, you need to make sure you're dealing with the most current information. So I wouldn't get too far ahead of things and fill that form out yet, because I do think some things will change. There's a HEROES Act legislation that's headed to the Senate. I've heard on TV that that's going to be dead on arrival. I watched an AICPA webcast last week, and they said, well, that's a negotiation tactic. I don't know what's going to happen, but according to the AICPA, there's several proposed changes to the PPP loan that have bipartisan support. So there's a real good chance there could be some more information that's beneficial to the borrowers that could help make this process easier and more forgivable. I know that Senator Joe Manchin has a proposed bill on his website that would extend the covered period from 8 weeks to 16 weeks for any PPP loan that's $500,000 or less. That's literally the only thing he has in that bill. It's just like a 1-page bill, and it's short. And if something like that passed, that would help out a large number of people. I'm hearing, and again, I don't know if this is correct, that the HEROES Act, if it were to pass, it would probably be a reasonable time frame would be July. And that's if it passes. So I think there's a real good chance that there's going to be some changes that come about to this loan right around the time you're looking at applying for loan forgiveness. It might be a strategy, if 100% of your loan's not forgiven under the current rules, to delay a little bit and on your request for forgiveness, if you can, if the banks will permit it. If you can string that out a little bit and see if any changes come about. There's a risk to that strategy because changes could come about and they could be worse. But hopefully some of those changes will be better and maybe more will be forgiven. So that's something to think about as you get close to applying for forgiveness, is that there might be some large changes and maybe we'll catch wind of that on the news. All right, that's the end of the presentation. I don't know how much time we have for Q&A. I think I'm pretty close to 1 o'clock. But I'm available for as long as you guys are available. So
Oh, good.
if you have any questions, let me know.
Oh, good. Well, thank you, Mike. I was going to ask if you had time to stick around for questions, and hearing that you do, I think what we'll go ahead and do is I'll move forward with my closing remarks, and just so those of us who cannot stay on past 1 can click off, and then we'll resume with questions, because we do have several questions that came in through the chat. Is that okay with you?
Yeah, are people still awake? I'm surprised they're still awake. Okay, yeah.
Well,
yeah, okay.
I was going to make a joke about accounting presentations, but I think those of us who were listening were meticulously taking notes on this one. So you did a nice job of keeping us engaged. So for those of you who cannot stay on much longer, I did want to remind you not to forget to support our local businesses during this time of reopening to the extent that you're comfortable. So many businesses have taken great care to prepare for customers returning to their retail spaces, eateries, socializing spots, and professional service locations. So let's start our local economy's engine together and keep it rolling as we learn how to live with this virus and we continue to learn from it. We will not have a presentation following Memorial Day, but we will be back on June 2nd when we hear from Christina Miller and Bob Grossclose of CSG Incorporated with a presentation titled COVID-19 Managing Employee Expectations. So I'll thank you again for joining us live today. Please keep up with us through our weekly newsletter and our social media accounts on Facebook and Instagram. And again, leading into Memorial Day weekend, I'd like to take a moment to honor those who made the ultimate sacrifice for our nation with a quote by Helen Keller. "So long as the memory of certain beloved friends lives in my heart, I shall say that life is good." So have a safe Memorial Day weekend, Fairbanks, and be well. And now we'll go back to questions. And Mike, I'll start off. So I think I heard you mention the rules about prepayment of non-payroll costs, but what about prepaying qualified payroll costs like advances to salaries or healthcare insurance payments that you know are coming?
I would say probably not. I don't think those would count because the 8-week period is, they're basically saying it's expenses that were paid in that period or incurred in that period. So whenever you get in prepayment, now you're kind of falling outside of either one of those rules. So I believe the answer for payroll costs or non-payroll costs is both or no. I don't think those would qualify.
Okay, thank you. I appreciate that. And I think I heard this as well. And then after this one, I'll turn it over to Janelle for the chat. But you mentioned something about voluntary resignations that fall within that 8-week period. And I think, can you just confirm that the reduction in payroll, if you're not able to replace that person, that does not count against you?
That's correct. And the one thing I kind of skipped over in the documentation part is the SBA is saying they do want some documentation that you made a written good faith offer to, if for someone that doesn't want to come back to work, or have your employee that said, hey, I don't want to come back to work, that voluntarily resigns, have something for them, documenting that. The reality of this is that, and I don't want to be flippant about this, I don't think many people are going to get audited that have a loan of $2 million or less. However, they're saying they have to keep the documents for 6 years. So who knows how the political climate could change. It's just a good idea to have that stuff documented, keep it in a box. If someone ever does come back, you're safe. So.
Okay, so we do have quite a few questions online and they're continuing to roll in. So I've tried to sort of categorize them into a couple of different blocks. So hopefully we can kind of cover them by general topic. So one category that there's a couple of questions about the covered period. So I know you talked somewhat about that, but can you talk a bit more about the 8-week covered period? Initial information about this was that eligible payroll could either be prior to the loan receipt, but after economic shutdown, or 8 weeks after the receipt of the loan.
Okay, so the covered period, well, there's two parts to it, or there could be two parts to it. There's the payroll costs and non-payroll costs, but in general, the covered period starts the day the money hits your bank account. And you have 56 days from that day, the disbursement date, to spend that money and have it be included in the as a covered period. And I can't tell if everyone's still there. Did everyone leave? Yeah, okay. My screen blanked out for a second. I apologize. So the 8-week period starts from the disbursement date and lasts 56 days later. The SBA came out with this alternative covered period, which is only for payroll. And if you are in the instructions, it says, if you are a biweekly payroll payer or less, which in my mind, that's biweekly or weekly, you can pick the first day of your regular payroll cycle after you receive the money as a start of your covered period. So again, if the money hit my bank account on April 20th, that's when the covered period starts. But your alternative covered period can start if your next scheduled payroll was supposed to be April 24th. Well, that's when your alternative covered payroll would start. And it's trying to align the covered period for payroll with your natural payroll cycle of every 2 weeks. So, or even every week. So you don't have to do an extra payroll to get all that compensation out the door. Does that make sense?
I'm seeing some nodding heads, so hopefully yes.
Okay.
So related, and I don't know if you would want to say anything specific to this one, but someone said our payroll is paid out monthly, but it is tracked daily. So our loan came in partway through the month. Would payroll incur, so the payroll incurred won't match what was actually paid during that 8-week period. Is that a problem?
Well, there's a solution to the problem. One is if you're monthly, I don't think you can use the alternative covered period. But if your regular payroll cycle is monthly, so let's just say your covered period ends on June 15th, but you're not going to make a payroll until June 30th or July 1st even, then at least the first half of that payroll, the first 15 days of that payroll will count, even though you paid it in late June or July after the covered period ended. Either some or all of that payroll will count. I think realistically, you probably have to prorate your payroll for the days that count. She said it's tracked daily, so that wouldn't be very difficult. But that's not exactly clear in the instructions, but I think it's probably realistic to assume that the amount that was incurred only can be included. So the first 15 days in that example would count even though you paid it later.
Okay. So moving on a little bit to how you calculate those payroll costs and what effect that might have. Someone said, let's say in the end, it's determined that the actual covered costs of the payroll and other eligible expenses that were paid out by the business during that period are less than the amount of the loan that was issued under the PPP program. Does that threaten the overall forgiveness or just the amount of the shortfall or the difference between what was paid out and what was received?
Well, that depends. So there's a couple of calculations that go into this. There's the salary reduction calculation, and there's also the full-time equivalent calculation. But I think a lot of people are going to end up spending less than the loan amount they received. I think probably more than half, maybe even more, will have some money left over that they don't use for payroll or maybe even non-payroll expenses that qualify. So the answer to that question is kind of difficult, but I guess what I would say is just because you have less, you didn't use it all, doesn't mean everything you used won't be forgiven. That's not necessarily the case. And the one thing I didn't talk a lot about is what happens to the amount that's not forgiven. Whatever amount that's not forgiven turns into a 1% loan over 2 years. The first 6 months are deferred, so it's really amortized over an 18-month period. I find it almost impossible to believe that the SBA won't extend that out longer, because if people are still hurting 6 months from now and they have to start paying this back on a short amortization schedule of 18 months, that's going to be difficult for people to do. So I think in the coming months, you're going to see the SBA increase that as well.
Okay. Another one about, how you calculate the payroll costs, I guess. Someone said initially regular contractors, like our weekly bookkeeper, were allowed under this program, and now they are not. We have continued to pay the amount we used on our application to that contractor. Will we have to return that amount, or can it be included in the 25% that's not specifically payroll related?
Okay, so I think they're referring to paying their bookkeeper as an independent contractor as opposed to an employee. If that's the case, then that was actually not included. It was never should have been included, even in the text of the bill itself. And no, they won't be able to include that in the 25% either. The bookkeeper would have to go apply for their own PPP loan is how you get around that.
Okay. How do we calculate full-time employees if we have non-hourly pay rates, like trip or load rates for truck drivers, for example?
Trip or load rates. I'm gonna have to think about that one and probably get back to the person. If you get an email, I could probably look at that a little bit. I mean, I'm assuming it's somewhat similar to salary as opposed to hourly, but I'd want to look at that before I give them an answer. Is it possible if you get an email address and you can give that to me and I can get back to them?
We will do our best to do that. So that actually gives me a good segue to just say that anyone who has further questions about this, you could definitely email our info@fairbankschamber.org email address. And, you know, I hate to put you on the spot, Mike, but if you're willing, we would love to be able to share a PDF of your slides because a lot of people have been asking. They found it really useful.
Absolutely. Yep. Feel free.
Great. So I'll just say again, that's the info, I-N-F-O, @fairbankschamber.org email address. Just shoot us an email and we'll get you a copy of those. Just a couple more questions that I wanted to throw in there because they're about the non-payroll expenses that are eligible under the program. So employer portions of the FICA contribution to the Social Security and Medicare, are they eligible as payroll costs or not?
No, employer portions are not. There was a little bit of confusion early on with this loan. The way the text was written was poor, and people thought all payroll taxes were included. Well, the way the bill is written is you include gross compensation, and in gross compensation is the employee's share of their federal income tax and FICA tax. So what the bill was trying to say is you can't add that back in again. So the short answer to your question is no, employers cannot. They're on the hook for the 7.5% or 7.65% of their FICA tax. They have to cover that. That's not forgivable.
Okay. And a lot of us, including probably many people still on the call, are working from home these days. So is a portion of the mortgage for a home office available for forgiveness?
So short answer to that is no. The way, but it also depends a little bit. So what's been excluded by the SBA is self-employed independent contractors. We call them Schedule C filers, people that file a Schedule C on their tax return. They're being limited to the amount that they can have forgiven. They can apply for a loan of 2.5 times their average monthly pay in a year, but they're only going to be able to have forgiven about 2 times that amount. They don't get that extra 25% as it stands right now. Now, I think that could possibly change in the future. But right now, the SBA specifically said a lot of Schedule C filers, they work from home and they have their vehicles, their personal vehicles that they drive. These are business expenses that are also personal expenses, and this is not meant to be a windfall to those people. I don't agree with that rationale, but that's what the SBA has said. So unless they change it, I would say the answer is no. Now, if there was a case where a corporation were to possibly be using a portion of their home, there may be some avenue there, but you're getting into there's a lot of questions you'd have to have answered before that could be a possibility.
Okay, and one other question, which I think may apply to several folks, is what if a business paid out exactly what they put on their application, but that's less than they would have paid employees in January because they're not conducting their normal activities. So they have a reduced staff during the covered period because they simply are not providing the same services.
Okay, I think that's the case for a lot of people. I think of bars and restaurants, especially, and also a lot of seasonal employees. Employers are going to have the same problem already or coming up. So their loan, there's a safe harbor where they can get either their full-time equivalents back up or their salary reduction back up by June 30th that could help them from having loan forgiveness. But one way you have to look at this is that, let's say you got a $100,000 loan based on all of Lot 19's payroll. And now going forward over this 8-week period, you only pay out $20,000 because you have a lot less work. You still have $80,000 left in the bank. Now, that $80,000 might not be forgiven. You might have to pay that back either immediately over time, whichever you prefer, but it's that remaining $20,000 left. That's kind of the key, how much of that can be forgiven. But if you took the $100,000 and spent less, then you're definitely going to have less forgiven, without a doubt. I'm not positive that answers the question, but I think that might have been what they were getting at. If they've got more questions or I didn't answer that question adequately, they can email me that as well.
Okay, great. So I think to the best of my ability, I think we covered all the questions that were coming in. I will say we had, I think, about 90 people still on the live stream. So I'll mention that Katie's been posting the links from Mike's presentation into the chat. So they're clickable links in the chat if anyone wants to scroll back up and click on through to those resources like the loan forgiveness application and the other resources that Mike mentioned. Those are available. Mike, you mentioned that the forgiveness application is a tough form to fill out, and considering how hard you work to explain this and try to make it simple for us, we certainly appreciate that. And I will say a lot of the comments that we're getting online have that sentiment of how appreciative people are for you taking the time to put this together and try to help make this comprehensible to those of us here in Fairbanks. So thank you for that.
Well, thank you very much. I really appreciate that. And I appreciate the opportunity to present to you guys. It's not very often that people want to listen to an accountant. So if you want to talk about debits and credits later on, I'd like to talk about that too. Just let me know and we can chat about that also.
Well, thanks again, Mike. And I wanted to take a moment, since we do still have such a wide audience, to echo your sentiment earlier about the strength of our local banking community. Shout out, many of our local banks are chamber members and executive partners, and we want to thank you for your support of our local small and large businesses during this uncertain and challenging time. So thanks again, Mike. We'll be in touch with more questions if we have them, and we'll go ahead and sign off. Thanks everybody for your extra time today. Enjoy the week ahead.